Alright, everybody, welcome back. It is Saturday, December 2nd. This is a review for Friday, December 1st, of course, and a weekly wrap up. We're here at precisealgorithmtrading.com, and this is where it lives, our daily review section. And there's all sorts of stuff on our website to kind of explain what we're doing. But really, the daily reviews is where I get into a lot of the how to with a lot of this stuff. So uh, under the algorithm trading systems tab, there's a lot of information as well, talking about our automated trading systems and our manual trading systems. So, um, anyways, encourage you to really peruse all of that. We'll come back here to stockcharts.com. Let's jump over to our automated trading systems for what happened on Friday. Again, I've been out of town, so it's actually a really interesting thing when the automated trading systems are running and I'm not able to really monitor them. I do have monitoring on my phone and on an Apple Watch for that matter to be able to know when these things are trading in and out, to be able to just pop open an app and take a look and make sure nothing's it's a computer, so you can only trust it so far, um, just because computers do have failures. But anyways, we do that, and it's pretty successful. So here's the Dow futures, and you can see we got a new equity peak. So that's always welcome. The new green dots means that we are seeing new highs in our equity. This is the results of our trading, not the actual trading charts themselves. So and our particular system here is based on a 1 minute chart, which is what that shows right there. This particular one, and it's based on the Dow futures. So the trades on Friday, December 1st, are right here. So actually more losers than winners, but the winner made up a lot more than the loser did. So uh, the losers, I should say. So then that's how this thing's built. Moving on, this is what the on the weekend reviews. I open this up so it shows more like a year's worth of data, or a year plus in this case. So um, and what this really shows you is that we have a nicely upsloping equity curve, which is what you want from the bottom left to the upper right. And I went ahead today and dropped down. So this is, you can see on this chart that in that period of time we get up in the neighborhood of this 200 and let's call it 15,000. And this is where the actual data comes in here. Um, these are the summary screens for, this is the summary screen for this particular system, and it shows long trades versus short trades. It shows what the profit factor is, which means a lot to some people, not so much to me. The percent profitable right here, long and short, and together. The number of trades, winners, losers. We get into down here, consecutive winners, consecutive losers, and anyways, it's a lot of data, and it's all literally based off of what this thing did in every one of these trades. And then you go into this situation here, and you can see that contracts held. There's three. This is based on three. So everything, if you were going to trade one contract, you just divide everything by three, or you can just run it through and see what all the drawdowns and things are. So this is where we get on. This thing says account size required. That's not true, and I don't like that they put that in there this way. But what you really need is 3 or 4 times that account size to make this a viable trading system, because you need to be able to withstand more than the maximum drawdown, which is what this thing is showing. In this case here, it's 11,973. I need to have an account balance that's able to withstand 2 to 3 times that, or even 3 or 4 times that, to make you really comfortable. And nothing's comfortable about taking a drawdown, but knowing that your account value's fine and it's mostly uh, liquid and on the sidelines while that's happening is kind of the idea. So I don't know if that makes sense to everybody, but once you get into this, it sure makes sense to me. So um, this is intraday max, and this is trade close, like after you close out every day, the max drawdown. And then this is each trade's max drawdown, and that's literally based off the stop that's in place. So anyways, thought that's good information to share every now and then. And the numbers might seem incredible, but these things they trade multiple times a day, and you're just taking advantage of basically the volatility in the markets. All right, here is the Russell 2000, and we got a giant pop on Friday, which is great because that's what you need on this one because it doesn't trade near as often. Um, in fact, it only had one trade, and there it is. And in the longer term, this is what it looks like. So we get a lot of back and forth up here in the upper zone, and it looks like we're possibly going to take back off again. But we've had that happen back here before it finally got up. This is why I'm actually looking at this system as possibly running it through where it trades a little bit more often, and you have more of an upward slope as opposed to this one got up here and it's gone sideways for a long time. So, but in the scheme of things, this is how its numbers work out. Up 79,000. That's in that period of time. Same period of time, just over a year. And the the percent profitable is a little bit lower than the previous one, which makes sense. Consecutive winners and losers. I mean, these numbers they are what they are, and you can actually see that this thing wins better on the long trades than it does on the short. Possibly even to the point where you turn off the shorts on this one, and you might actually have a better uh, win loss and everything else. And then down here, you can also see that this thing is based on 9 contracts, which I don't like because you're paying a lot of fees. So that's another one I can work on getting it down. And the max drawdown's 24 grand. So, and then I don't like how big the losses can be. So I can definitely work on these parameters and get this thing to be much more. I mean, this is actually fine for an upsloping trend line, but I want something more gradual and more totally bottom left to totally upper right without all this sideways action. All right, and then the Nasdaq, which is still my favorite system, actually drew down a little bit on Friday. Um, but that's part of the idea. The other ones make up for it. So this traded a lot on Friday. We had some good winners in there, but we also had just a lot more losers. And that makes sense because Friday's action in the overall markets was very bullish. And I think on a day when you have such a bullish day, if you don't catch the major bullish trends, which this one just didn't, it did a few, but it had too many of where it got caught, basically taking short trades and whatnot. So you can actually see that's a short entry and a stop loss. Um, this one here, that's interesting. That was a long entry and a stop loss. So anyways, that's if you look at this way granularly. But at the end of the day, this is a great looking equity curve. And this little bit of drawdown we've had lately is no big deal. So we're looking for a new rise here probably within the next month or so. and we'll keep working forward. So here's the stats for it. That's part of the reason it's our best trading system. It's nice gains. Uh, our win loss down here shows like that. Our percent profitable, it's still all under 50%, but the idea again, um, bigger winners than losers, even though you have potentially more losers. And the number of trades are 3, so there's not a lot of commissions here. The max drawdown being 24 grand, and these are relatively small losses along the way. So that's your per trade max drawdown. So in this case, you need, in this you need a 75,000 or $100,000 account to trade this thing comfortably. Okay, I hope that all makes sense, and uh, if that piques your interest, that's the type of systems that we have here online. So moving on to how the markets moved. This is the S&P 500. We got a big pop, bullish out of I think all the markets except for oil, um, and we're really cruising to this 52-week high. I mean, at this point, I'd say it's a lock that we're going to get there. The Dow took it out the other day, or took it out Thursday, and then went higher by 294 points. So this is where shorts basically are starting to get trapped, and um, yeah, people are just shorting up here, and I've had hedges put on myself, and the reason you don't get trapped is because I have stops. So the Russell is a nice big green candle. That thing is up. Let's look at IWM, 5.25% on the day. So that's a big move, and that's actually pretty bullish in my opinion for the whole markets. Um, Not to say that we're not going to roll over, because I think that's inevitable here, and probably a little bit overdue. The Nasdaq, yeah, that actually is the one that is at this point. It has rolled over a little bit. I mean, we kind of already came up here. We could come up and still tag that 52-week high, but I think we got close enough to call it. So, I mean, we'll see. At any point now, things are getting exhausted. They need to pull back and take a breather, and that would actually be pretty um, healthy for the markets. Let's go to oil here, down 2.08%. There's really nothing to get too bullish about here. I mentioned it the other day, unless you were like just trying to be a bottom feeder, set a good tight stop if you're going to do that to protect yourself. I am personally not, and I'm not going to do that until I get a cross back above this moving average and start to see things to start leveling off, or possibly the same thing happening on the hourly chart first. Right now, the energy sector looks like it's pretty weak. Let's look at XLE. Yeah, so XLE is looking that way as well. That's the whole sector for energy. Although we are getting a little bit of pops over here, but you can see it's really volatile, back and forth. Um, it's choppy, and there's really nothing to get too worked up about getting long here. All right, gold. Let's pop in gold, GLD. And it broke its 52-week high. So gold is kind of working with the rest of the regular markets, which is not always the case. And so that's just kind of noteworthy. Let's go back to stockcharts.com and look at the bullish percent indexes. Bullish. So the bullish percent indexes are literally, this is the Dow, but it's a measure of so this is 30 stocks in the Dow Industrials, and what it's doing is saying how many of the 30 stocks are on a point and figure buy signal. And the answer right now is 73.33% of the stocks in the Dow 30 are on a point and figure buy signal. And that tells you that the other ones are on a point and figure sell signal. So it's doing is giving you a measure of bullishness versus bearishness in the markets, or buyers versus sellers. It's kind of a sentiment indicator. So right now this one didn't move on Friday, even though the Dow moved quite a bit. The NYA added a new X and up 4.17%. So 53.87% of the stocks in the NYA are on a point and figure buy signal. The transports, 16.67% move back to the bullish side. So 35% of the ones in the transportation index are on a point and figure buy signal. Um, the SPX added a new X today and went up 4.01%, and 67.4% of the stocks in that SPX of the S&P 500, 67.4% of them are on a point and figure buy signal. It's the literal definition of what we're looking at here. The OEX didn't move. So the S&P 100 stocks didn't move, but the S&P 500 stocks did. And then the NDX actually went negative. So the NASDAQ, I think what we see there, I think they moved higher by 2.6%. That's the NASDAQ total index. And then if we look at the NASDAQ 100, they actually moved negative. So uh, I think that's all on basically the largest capitalization in those markets. So that's where we're at. Pretty great, actually. If you're a bull, long term, it's looking better for the markets. Although, just got to watch it day to day, week to week, and make your keep your risk right, and make your place your what you see, not what you think, really, in the markets. So that's what I got. I hope everybody has a great weekend. Take care and good trading. We'll talk to you next week.